mortgage and deed of trust questions. Question 1. Which answer most accurately identifies prepaid interest equal to 1% of the loan amount in a real estate transaction? Option A, discount point. Option B, balloon payment. Option C, hypothecation. Option D, Freddie Mac. The correct answer is option A, discount point. Borrowers may pay points to obtain loan pricing offered by the lender. Points should be distinguished from origination charges and down payment. The dollar cost depends on the principal amount rather than the property price. Question 2. A question arising during marketing review concerns a lender charge for processing, underwriting, and creating a loan. Which choice gives the best classification? Option A, discount point. Option B, loan origination fee. Option C, adjustable minus rate mortgage. Option D, private mortgage insurance. The correct answer is option B, loan origination fee. Settlement disclosures identify the amount and party responsible for payment. The fee is commonly stated as a percentage of the loan amount or as a flat charge. It is distinct from prepaid interest used to alter the note rate. Question 3. While analyzing a small apartment building, Amina must apply the concept involving gradual repayment of a debt through scheduled installments of principal and interest. Which answer should be selected? Option A, Ginnie Mae. Option B, pity. Option C, amortization. Option D, defeasance clause. The correct answer is option C, amortization. Early payments on a level minus payment loan usually contain more interest than later payments. Full repayment occurs at maturity only when the schedule completely reduces the balance. Each payment is allocated according to the loan terms and remaining balance. Stressed about your Maryland real estate? We can take Maryland real estate for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done. Question 4. Which real estate term is defined by pledging property as collateral while retaining possession and use? Option A, balloon payment. Option B, adjustable minus rate mortgage. Option C, annual percentage rate. Option D, hypothecation. The correct answer is option D, hypothecation. The concept differs from transferring full ownership to satisfy the debt. Default can allow enforcement against the collateral under the security instrument. The borrower grants a security interest without physically delivering the real estate to the lender. Question 5. In a transaction involving a condominium unit, which rule controls when there is a charge imposed under the loan terms when principal is repaid before the permitted time? Option A, prepayment penalty. Option B, pity. Option C, deed of trust. Option D, VA minus guaranteed loan. The correct answer is option A, prepayment penalty. The provision compensates the lender for early termination of expected interest income. Its enforceability and disclosure are controlled by law and the loan program. Borrowers should review the note before refinancing or selling. Question 6. A listing broker asks about a loan provision allowing the lender to demand repayment when the secured property is transferred without permitted consent. Which answer provides the legally accurate concept? Option A, Regulation Z. Option B, due minus on minus sale clause. Option C, annual percentage rate. Option D, fixed minus rate mortgage. The correct answer is option B, due minus on minus sale clause. Federal and state rules may create exceptions for certain transfers. The clause limits the borrower's ability to transfer the property subject to the existing loan. A buyer should not assume the existing financing can remain in place. Question 7. Hector encounters a security instrument involving a borrower, lender beneficiary, and trustee during a due minus diligence meeting. Which principle should guide the analysis? Option A, Fannie Mae. Option B, adjustable minus rate mortgage. Option C, deed of trust. Option D, secondary mortgage market. The correct answer is option C, deed of trust. The trustee holds authority connected to the security arrangement for the benefit of the lender. The borrower's repayment obligation remains in the promissory note. State law determines the foreclosure process and the parties' precise rights. Question 8. Which choice best matches the description the federal regulation implementing consumer credit disclosure requirements under the Truth in Lending Act? Option A, deed of trust. Option B, conventional loan. Option C, equity. Option D, Regulation Z. The correct answer is option D, Regulation Z. It does not regulate brokerage agency relationships. The regulation governs advertising and disclosure of credit terms. Triggering terms in an advertisement can require additional information. Are you looking for Maryland real estate actual questions? Visit our website pokerexams.com to access Maryland Real Estate Study Guide with actual questions and answers. Scan the QR code or click the link in the description to get Maryland Real Estate Answer Key today. Question 9. During review of a townhouse in Salisbury, the parties discuss a mortgage provision requiring release of the lender's security interest when the secured debt is fully paid. Which term applies? Option A, defeasance clause. Option B, debt minus to minus income ratio. Option C, annual percentage rate. Option D, VA minus guaranteed loan. The correct answer is option A, defeasance clause. The borrower is entitled to evidence that the encumbrance has been discharged. The provision protects clear title after repayment. Satisfaction of the obligation removes the lien created by the security instrument. Question 10. An exam scenario presents a government-sponsored enterprise that buys qualifying mortgages and supports secondary market liquidity. Which answer is most accurate? Option A, hypothecation. Option B, Freddie Mac. Option C, TILA. Option D, private mortgage insurance. The correct answer is option B, Freddie Mac. Retail borrowers normally obtain funds from lenders rather than directly from this enterprise. It establishes standards for loans it is willing to purchase. The organization helps connect mortgage originators with capital-market investors. Question 11. A licensee preparing for a settlement preparation must recognize the market in which existing mortgage loans are bought and sold after origination. Which concept does this describe? Option A, prepayment penalty. Option B, promissory note. Option C, secondary mortgage market. Option D, FHA-insured loan. The correct answer is option C, secondary mortgage market. Loan sales replenish lender funds and support continued lending. Investors evaluate the credit and payment characteristics of the loan pools. The borrower generally continues making payments to the designated servicer. Question 12. Which answer correctly classifies a situation involving a loan whose interest rate may change according to an identified index and margin? Option A, Freddie Mac. Option B, conventional loan. Option C, VA guaranteed loan. Option D, adjustable rate mortgage. The correct answer is option D, adjustable rate mortgage. Payment amounts can rise or fall as the rate changes. Rate adjustments occur at stated intervals and may be limited by periodic or lifetime caps. Borrowers should understand the initial rate, adjustment rules, and maximum exposure. Question 13. At a financing review in College Park, Quinton explains a standardized expression of the cost of credit that includes interest and certain finance charges. Which real estate principle is involved? Option A, annual percentage rate. Option B, defeasance clause. Option C, amortization. Option D, loan origination fee. The correct answer is option A, annual percentage rate. The figure helps consumers compare loans with different fees and rates. Required calculation rules determine which charges are included. It is not necessarily identical to the note interest rate. Question 14. A transaction file for a retail suite raises an issue involving the combined housing payment components of principal, interest, taxes, and insurance. Which answer best resolves the classification? Option A, adjustable rate mortgage. Option B, PITI. Option C, VA guaranteed loan. Option D, fixed rate mortgage. The correct answer is option B, PITI. Escrow accounts commonly collect the tax and insurance portions. Lenders use the total to evaluate the borrower's recurring housing obligation. Association fees and mortgage insurance may also be considered in underwriting even though they are not part of the acronym. Question 15. Which concept should a salesperson apply to facts involving the federal credit law requiring clear disclosure of borrowing costs such as annual percentage rate and finance charge? Option A, balloon payment. Option B, fixed rate mortgage. Option C, TILA. Option D, hypothecation. The correct answer is option C, TILA. Certain residential credit transactions also carry rescission rights. The law regulates disclosure of credit cost rather than property condition. The goal is meaningful comparison of credit terms before the consumer becomes obligated. Question 16. Jonah is studying a rule concerning a large final payment due because scheduled installments did not fully amortize the debt. Which term should be chosen? Option A, RESPA. Option B, VA guaranteed loan. Option C, mortgage. Option D, balloon payment. The correct answer is option D, balloon payment. The term must be disclosed clearly in the loan documents. Refinancing risk increases if the borrower cannot pay the final amount when due. The borrower makes periodic payments that leave a remaining principal balance at maturity. Question 17. When a subdivision lot transaction involves a government-sponsored enterprise that purchases qualifying residential mortgage loans in the secondary market, which answer identifies the controlling concept? Option A, Fannie Mae. Option B, RESPA. Option C, fixed-rate mortgage. Option D, Ginnie Mae. The correct answer is option A, Fannie Mae. Its activities support liquidity and standardization in housing finance. The organization does not usually make retail home loans directly to individual buyers. Loans must satisfy applicable eligibility and documentation standards. Question 18. A practice question describes a federal corporation that guarantees securities backed by qualifying government-insured or guaranteed loans. Which response is best? Option A, adjustable-rate mortgage. Option B, Ginnie Mae. Option C, mortgage. Option D, PITI. The correct answer is option B, Ginnie Mae. The organization does not buy conventional mortgages in the same manner as the major sponsored enterprises. The guarantee supports mortgage-backed securities containing approved loan types. Its role concerns the securities rather than direct consumer lending.
Stressed about your FCLE? We can take FCLE for you remotely and undetected. We always guarantee a pass in payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done.
Question 19. During a due diligence meeting, which principle is illustrated by coverage protecting a conventional lender when the borrower has a high loan to value ratio? Option A, deed of trust. Option B, loan origination fee. Option C, private mortgage insurance. Option D, Ginnie Mae. The correct answer is option C, private mortgage insurance. The premium compensates the lender for part of the default risk. Cancellation rights depend on law, payment history, and the remaining balance. It does not protect the borrower from foreclosure or eliminate the debt. Question 20. Which answer states the concept associated with the borrower's written promise to repay a debt under stated terms? Option A, Ginnie Mae. Option B, Freddie Mac. Option C, discount point. Option D, promissory note. The correct answer is option D, promissory note. The lender may enforce the debt according to contract and applicable law. This document establishes the personal obligation, interest rate, payment schedule, and maturity terms. It is separate from the instrument that pledges real estate as security. Question 21. A tenant handling a cooperative unit in BOE must identify the percentage of gross income committed to qualifying monthly debt obligations. Which choice is correct? Option A, debt to income ratio. Option B, due on sale clause. Option C, loan to value ratio. Option D, defeasance clause. The correct answer is option A, debt to income ratio. The measure helps evaluate repayment capacity rather than collateral value. Program guidelines determine which debts and income sources are included. Lenders compare housing expense and total recurring debt with income. Question 22. During a buyer consultation for a duplex in Rockville, Samuel needs to identify the rule described as the federal law addressing settlement service disclosures, escrow practices, and prohibited referral arrangements for covered mortgage transactions. Which answer applies? Option A, fixed-rate mortgage. Option B, RESPA. Option C, debt to income ratio. Option D, conventional loan. The correct answer is option B, RESPA. It does not set real estate commission rates or guarantee loan approval. The law restricts kickbacks and unearned fees connected with settlement services. Covered consumers receive information about loan and closing costs through required disclosures. Question 23. A buyer representative is reviewing a warehouse in Cumberland. Which term describes a loan provision allowing the lender to declare the entire unpaid balance due after a qualifying default? Option A, mortgage. Option B, due on sale clause. Option C, acceleration clause. Option D, debt to income ratio. The correct answer is option C, acceleration clause. The remedy converts future installments into an immediately payable obligation. Notice and cure rights may apply before enforcement. The clause supports foreclosure when the borrower fails to resolve the default. Question 24. At a contract revision, a Maryland exam candidate encounters the following description: a security instrument creating a lien on real estate to secure repayment of a loan. Which concept is being tested? Option A, private mortgage insurance. Option B, promissory note. Option C, discount point. Option D, mortgage. The correct answer is option D, mortgage. Foreclosure procedures may be used if the obligation is not performed. The borrower retains ownership while granting the lender a security interest. The debt itself is evidenced by a separate repayment promise. Question 25. Leah is assisting with a vacant parcel transaction in Hagerstown. Which principle applies when the facts involve the percentage relationship between the loan amount and the property value used by the lender? Option A, loan minus to minus value ratio. Option B, debt minus to minus income ratio. Option C, VA minus guaranteed loan. Option D, Freddie Mac. The correct answer is option A, loan minus to minus value ratio. The ratio is calculated by dividing the loan by the applicable value or purchase minus price measure. Lenders use the measure to evaluate collateral risk and insurance requirements. A lower ratio generally means the borrower has more equity in the transaction.